All right, SPY, we're continuing to just grind along, and we are getting to new highs, but it is grinding. Volume is decreasing, and yes, I know some people don't like using volume. I typically use it on the retracements to see if the volume has weakened. So if you see this pullback here, and maybe this candle, the price action internally for this candle was bullish, but you can also see if it was red that this has now decreased a lot more than this previous candle. If some people don't use volume, I think it's very, very important. Very important. Some people even live and die by volume. So that being said, it's continuing to just grind higher. And if you want to look at the volume, you can say, okay, you know, this isn't broken up with any significant type of volume to say that it continues to the upside. And it started, you know, so is this the tail end, quite honestly? Is it involving some type of retracement? It needs to pop off, retrace back down, and continue to the upside for me to get excited about stuff. But again, it is grinding higher, and there are names that are working. QQQ looks a lot better, and gave a nice, if you took this one, break of this high or break of this high, you continue to get paid. So nothing wrong with that. It looks good. I mean, if you look at the weekly, again, it looks really good. Sideways consolidation. You see that it went, well, not even consolidation, just went sideways for a little bit. 1 week, went all the way down, came up, and then continued to go up. So volume has increased as well to the upside for that. This candle was not complete. It's only 2 days in or 3 days in. So we'll see how that one ends up for the week. You got the IWM. The Russell, to me, just needs to do something because the volume is decreasing as well, which I like to see under a retracement. This is our last pivot points that we were looking at, and it came up and faded that. It gapped up and came down and then rolled down for 3 days. Now, on the retracement to the upside, you can see that the volume has decreased while the volume has increased. So we do have that divergence that a lot of people look at to say, okay, what's going on right there? Plus, we have momentum to the downside. So this is something that we need to be aware of, is that, you know, do we have 1, 2, 3, 4, 5? I don't know. I want this wave 2 and potentially this wave 4. The wave 4 wants to be bigger in price and time, and it's not. So got to be careful with that. But again, this could be 1, 2, 3 down, and you don't know. And remember, every wiggle is in a wave. So this is something that you definitely want to take a look at, because if it breaks, again, I was looking at a break of these lows, didn't break these lows, but didn't give a lot of price action in between as well. You know, this is not a lot of price action. It's up, down, sideways as hell. So you had this going on, and this is a little bit annoying for the latter part of the day. You had some good movement in the beginning, but until, you know, about 1 o'clock, and it just went dead after that. So let's see what we have there. Diamond looks good, continuing to be up. I mean, it's, again, this is another pattern that you're saying, okay, do we have the rising wedge? And we need to see some type of resolution to it. We need to see it pop up, down, or pop down, flag, and down as well. Volume is kind of dying for both. You have selling buyers volume dying down, sellers volume dying down. So, and that's when you can have this a little bit of chop area. I mean, again, it has been going up. So underlying trend, we could definitely see that we got this going on, that we have a nice trend line here, but we also have, you know, if you want to kind of look at this, you could say, listen, look at how this price action is, you know, grinding up. 1, 2, what is it? 1, 2, 3, 4, 5, fifth wave. You guys see what's going on from there. So we'll see how it works out and go from there. We're going to look at some names now. Apple did great. I mean, again, I was looking at, again, this is earnings, so, you know, I don't typically trade earnings, but I was just looking at the price pattern, quite honestly, and I was looking at if it broke the low, that it would dump below, but again, it gapped up and stayed up. So the price action, you can see here from a 15-minute, you know, this is like a breakout trader's dream. So you break above this high opening range, and it continued up and traded sideways. So we could see that if you have this amount of movement going up, so I think that if it breaks above this highs, it has another, you know, $3-4 to the upside. And of course, the century mark is going to be kind of that psychological battle per se to get above. So you also have Facebook. Facebook continued to look high again. The buy was here, continues to look high, and actually would have hit my target as well. So that's a great thing as well. Don't chase. NQ, this name that came up. Got to be careful with this one. Again, you know, you can see that it's in a downtrend. and kind of go from there. So again, this could be the wave 4 happening right now, and we'll see what happens from there. So be careful with that one. Microsoft, these are red candles, so again it could be flagging, but I wouldn't short this right now, especially you could say this double top, but that's rubbish. You have LinkedIn. LinkedIn actually popping up. I know people want to get here. I don't want to get in there. Okay, I want to get a pop above and get above there, but I guarantee you there's a ton of orders above this for the breakout. And where the hell do you put your stop? If it's 176, do you put your stop at 152? I doubt it. Do you put it at, you know, the end, the low of this candle? I don't know. Do you do the intraday? You better, because it's not going to go straight up and then just go all the way up to this one. Now it could go up $20. I mean, yes, but again, the probability, you can see that the volume has increased, the upside, which is great. If you're aggressive, you probably could have took it right here, quite honestly, because it would have been just a lower high if you see it. And the break above there, very, very minimal risk. You're talking about let's say $3, but where do you put your risk if you put the breakout? That's the question that you have to ask yourself. You have INO. This is a pharmaceutical company that gapped up and stayed. It gapped up, then rolled, and then kind of went sideways. So again, I would be looking for a better setup for this, because I don't know if this was news driven, but I do like this price pattern that was set up as well. So you have these higher lows, and gave a nice engulfing pattern off the 20, and then it just shot up. So that's a pretty cool one. And last but not least, we have Biogen. That one hit my radar. Again, there's a gap up. It might be earnings or something like that. Again, I don't check these things because I don't really trade this stuff that often. So just looking at it, I wouldn't look to. Some people like to trade the gap and go, so they look at what happens tomorrow and they say if it breaks above this high, they would get in. Okay, I mean, target maybe, you know, it would have to be more than 360. So let's say it's 370 or something like that, but that's what I would be looking at. But again, on the weekly, we have to see if we have any price action. Yeah, shit, that looks really good on the weekly, quite honestly. So this could have been just your little 2-bar pullback and continue to the upside, because this is a nice engulfing pattern, and then it can come to break new highs and continue to the upside. So keep that one on your watch list, and we'll see how it goes from there. Take care.